Hello friends, today I'll be explaining the rate hike. Is it the only way to tackle inflation? Now, RBI has raised the benchmark interest rates by 25 basis points on 16 September 2011. The repo rate now stands at 8.25% while the reverse repo rate gets 7.25%. CRR and SLR are kept constant at 69% and 24% respectively. The 12th hike policy rates over the last 18 months may not take a pause, and there is every likelihood that the central bank may be giving another rate hike in the October 25th policy. RBI has hiked rates to tackle the inflation which is worrying India for a longer inflation period. For the month ended on August stood at 9.78% according to the WPI index. Let us see how India calculates inflation. Inflation is something we often hear regarding topics of our national economy, but very few people know how inflation is calculated. While leaving aside the debate on whether India should adopt CPI or the current WPI based on the government policy, let's find in detail how inflation rate is calculated in India, which is WPI basis. India uses the WPI method to calculate and decide the inflation rate in the economy, but most developed countries use the CPI to calculate their inflations. Usually CPI gives them the accurate results. As in India, a total of 435 commodities data are priced on the level in the WPI economy, but which is not an indicator of the movement in prices of commodities, but in all trade and transactions. It is released in monthly basis by the offices of economic advisor. The Indian government has taken WPI as an indicator of the rate of inflation in the economy. Many people argue that India should abandon WPI and adopt CPI, but as it reflects the clear picture about the economy is not sure. After a slight moderation in July, non-food manufactured products inflation rose again in August, suggesting that continuing demand pressures. For the weeks ended in September 3rd, find inflation stood at 9.4%. Meanwhile, the hike in petrol prices were around 3.14 per litre, with effect from September 16, 2011, which will have a direct impact on 7 basis points on WPI in addition to an indirect impact with a lag. Inflation remains a big challenge, and RBI cautioned the monetary stance, which will be guided by the rate of inflation by raising rates by 350 basis points since March 2010. When the repo rate increases, borrowing from RBI becomes more expensive. As a result of all loans and personal corporate are likely to become costlier. Banking and automobile industry were adversely affected by rate hike, and it is impacted on the economic growth of the nation. IIP for the month of July stood by 3.3%, and the lowest in the last 2 years was seen. Why can't RBI hike CRR? This is the question. The answer should be the 1% increase in CRR will suck 50,000 crores from the system. Considering the tight inflation, RBI can't choose the option. Money supply has been slowing quite nicely in India. CRR hike may work adversely. Now the way ahead. RBI is concentrating more on WPI number rather than the real inflation. We should remember that WPI is a symptom of inflation and not the real inflation. So real inflation is about the amount of money and the credit in the system. RBI's policies are working, and tight liquidity in the market proves the same. RBI shouldn't kill the economic growth because of WPI. RBI has kept all the options open for the next meeting. Inflation is expected to slow down by the end of December. We might be heading towards the end of the rate hike cycle. This may end the last one. Watch this space for more information or visit us at www.indianbanking.com.